how much money you got.
It's your boy Crypto Blood, and welcome to another Kicking It session. And today, I've got the legendary Max Keiser. What's going on, Max? How you doing?
Hey, Crypto Blood. Good to see you, man.
You
Great
too.
to be on, finally. It's been my dream to finally get on Crypto Blood.
Oh my God.
So this is all happening for me.
Stop.
Fantastic.
So I've got Satoshi Nakamoto here, guys, live and direct. What's going on, man? I haven't seen you since Florida? We were in Miami last year. I saw you and Stacy. What have you been up to, man? Like, what are your projects you're doing now? What initiatives are you pushing? I know you're doing something with Stacy, a new segment, right? You guys doing a new show?
Yeah, well, we have a new series that we shot called Gonzo, Max and Stacy. So we travel across the country. It's airing on RT. It's a whole separate show.
Oh, sweet.
They've aired 5 or 6 episodes.
What days?
10 episodes.
What days does it come on the actual RT channel?
It comes on Sundays.
Okay, what time?
And we're shooting now another new series called To the Moon. It's a 10-part series about the history of Bitcoin, and it uses a lot of archival footage from Kaiser Report because we started covering Bitcoin back in 2011.
Exactly.
And so we had a lot of people on the show who are top people in crypto, and we interviewed them for the first time. And so this is part of this series called To the Moon.
Sweet. So that's coming along great, man. That's awesome. I think I've never asked you this, and maybe you've mentioned it. I just never picked up on it. Like, who got you into actually knowing about Bitcoin and getting interested in it and getting your feet wet with the whole technology? Like, who got you introduced to it? Unless you are Satoshi and you're just introducing all of us to it. I don't know, maybe.
Well, I heard about it for the first time in 2011 when we booked a guest on the Kaiser Report named John Matonis.
Okay.
And he came on and told us about Bitcoin. And he had come from the encryption side of the business over there at Hushmail. Very quickly, we got an invitation to go to the first Bitcoin conference in Prague in 2011. And that was paid for actually by Tony Galippi at BitPay, who sent us our first Bitcoin and paid for our trip to Prague to be at the conference. And we ended up being venture capital investors in BitPay.
Nice.
And one thing that we've been doing really since 2011 has been making investments in these companies. So we have investments in Kraken, Bitfinex, Shapeshift, BitPay, and BitPesa in Kenya. I would say that our venture capital business is probably the best performing venture capital fund in crypto because we avoided all ICOs. Kraken is now doing a fundraising round at $4 billion. I think we got in at a valuation around $5 million. It's a 100x mover, and the exchange business is booming. Anyway, so when John Matonis came on the show and told us about Bitcoin, it played into already my experience in Los Angeles. I created the Hollywood Stock Exchange, and I invented the virtual specialist technology. So it's the first patented virtual currency, patent number 5950176, I believe. So it's the first patented virtual currency. And I was kind of primed to hear about this cryptocurrency. And so we immediately jumped into it.
That's dope, man. I'm like, I can't believe I've been watching you since probably 2011, 10. I don't know why I had not ever heard you mention Bitcoin on there. I wish I would have, but I didn't hear about it until 2013, early 13. But good for you, man. I'm glad you guys are making moves in that industry as far as, like venture capitalists.
Yeah, the fund is doing well. We made an investment last year in Casa Huddle, which came to us through our friendship with Jameson Lomp.
Yep.
And now they met up with Jeremy, the CEO at Satoshi Roundtable, and they are doing extremely well. And
so do you think like this is going to be the trend now, as the crypto industry matures, with Kraken looking to go IPO. Is that going to be the trend? Do you think that's going to start happening more and more with these private companies? I know as an investor, you hope to. That's
Well,
like
I
the
mean,
ultimate goal, right? So to go public.
all events. I mean, the venture, of course, you want an exit strategy. It either gets bought out, like okay, we own shares in Bitstamp, and
Right.
they were acquired. They were bought
Yeah.
out, so that was the exit. So then you want either to be acquired or
Acquired.
for there
Right.
to be an IPO, or in the case of Bitfinex, they've paid out a couple of very, very, very nice dividends. So the dividends on Bitfinex have already exceeded our basis on that investment. So that's already in the black. And
Speaking of Bitfinex, and this is not even on the outline. There's so much FUD around Bitfinex. Why do you think that is? Like, it's been like this for years. Like they always say they're insolvent, with the whole tether thing. And what are your thoughts about why the community perceives Bitfinex the way they do?
well, the community perceives everything with FUD, right? There's nothing in Bitcoin that doesn't have a huge negative kind of cheer, people in the background screaming, complaining,
But is that a
throwing.
sign of immaturity in this market, in this community? Because you don't see that like in equities. You don't see the level of FUD and emotional tone how you do with cryptos.
Yeah, I think it is a matter of immaturity because you have um, really technologists coming into the money market and currency business, and this is completely new for them.
Hmm.
This is the first time they've had really open source money or you know technologically you know uh, engendered money and as
Hmm.
such. So you bring in a completely different category of folks who'd have absolutely no experience with markets, finance, equities, absolutely nothing. So it's
Right.
they're learning from the beginning, and so they're going through a whole process of maturation.
Hmm.
And now we're starting to see kind of some maturity in the space. And to get back to Bitfinex, I think it does relate back to Tether, and there's a lot of questions about whether Tether was backed up by actual money. And there was a big discussion on this 2 years ago, and there was a conference call. Tether's, outlined how they were backed up by money in the bank, and that's since been corroborated by a couple of different sources. And so I don't see any problem with that. They have the collateral for Tether. And but to get back to the FUD question, also people tend to talk down projects that they're trying to either manipulate the price down or manipulate the price up.
Sure.
And you have social media is a great echo chamber for that.
Hmm.
And you do have it in equities. I mean, you do have it in the big leagues. You'll see major money managers like Carl Icahn will come out and FUD the hedge fund guy who was recently in Herbalife. There was a huge, major multi-billion dollar FUD fight over the price of Herbalife stock. I
Yeah.
think Carl Icahn eventually won that fight, but it was very similar to what you might see in the crypto business, but on a much, multi-billion dollar scale. So
Right.
it's just human nature. And you have, it's an interesting market because you have this whole generation, millennial generation now that's coming up through and it just this whole new paradigm of crypto money, cryptocurrency.
Yeah, I remember that whole beef between Icon and Bill Ackman, I think
Yeah.
is who it is. Yeah, that's crazy. Yeah, that's true. Speaking of Icon, I remember him saying, and this kind of segues me into my next question about where we are today with cryptos. I remember Carl Icahn saying not to confuse brains with bull markets. and we had a hell of a bull market in 2017. A lot of people were online, YouTube, traders overnight. They were just, the geniuses of our world. They knew everything. Nothing could go down. But now, we saw in 2018 that role reversed, and a lot of capital destruction occurred in 2018, and it's different. I think it's different this time. The crash this time is different than, let's say, the one we had right after Mount Gox, where there was a percentage wise, they may have been the same, but this go around, we had a lot of money, a lot of capital invested in projects. And what are your thoughts about the long-term ramifications, if there are any, from this last bear market, and it being different than priors?
Well, my experience goes back to the 1987 stock market crash. Mm-hmm. So I started on Wall Street in 1983, and I was on Wall Street for 7 years during the 80s. And you had the similar situation in the 1980s on Wall Street. It was predominantly 20-year-olds like myself. Mm-hmm. We became instantly wealthy. Mm-hmm. We developed incredible delusions of grandeur, of the God complex, if you will.
Right.
And could do nothing wrong. I can tell you crazy stories from that time. Then I started a company in Los Angeles called the Hollywood Stock Exchange during the dot-com boom. And of course that crashed in 2001, and the NASDAQ dropped 85-90%. It was a $5 trillion crash.
Yeah.
And right before that crash, you had the similar delusions of grandeur. I mean, the people who I hired, the 20-year-olds that I hired, they were telling me the same stuff that I was telling myself back during the stock market run of the 1980s, and I knew that we were approaching the top. And I actually sold out of a big position of my Hollywood Stock Exchange stock because I could see that this was going to crash because the conditions were the same. Then I had another experience with the silver market. We started buying silver at 15 and ran up to 50. There was an incredible euphoria at 50. Then it crashed back to 15. And now crypto, we rode it from essentially a market cap of 5 million to 840 billion. And it's had a $600 billion crash. But right before it crashed, you had the same incredible delusions of grandeur, the same God complex. People felt they were bulletproof. Mm-hmm. They could do no wrong. And just the kind of insanity you see at market tops was evident. And now you kind of have the opposite, where in the last 6 months, people are sick of it. You mentioned crypto and they throw up, it makes them vomit. It's horrible. It's just,
it's no longer the buzzword in the room, right? Like in 17, you mentioned crypto. Everyone's like coming over to you like, should I get into it? And, how long have you been in it and all that? You know what I'm saying? Like now people don't even want to mention crypto when they walk in the room,
That's why our fund, Heisenberg Capital, I think has done really well because we didn't do anything in 2017. We just stepped out of the arena and said, let this thing, play out. It's gone well past irrational exuberance. It's in the stratosphere somewhere. And now here we are at 3,500 or something like that. And so we're seeing bargains again. Mm-hmm. So on the fund side, we're talking to companies again. We're lining up equity investments now, and we see
on the dollar, probably, right?
We're talking to a few companies. I think I've mentioned on Twitter, for example, we're talking to Azteca, a company that does Bitcoin vouchers. We like that very much. There's 3 or 4 other companies we're actively talking to, and so we're kind of getting back in now when the the hot money is gone. So now
right.
The bargains are there, and you can find some good deals now.
No, that's cool. What are your thoughts about you saying that the market has kind of come back to earth, is repriced? What is fair value for Bitcoin? Like, do you think this is something we could ever achieve, or I should say? The fair value of Bitcoin?
I don't think the economics really are completely the book of Bitcoin economics has not been written. Yeah. I think Saifedean Ammous's book, The Bitcoin Standard, is the best book written so far about the economics of Bitcoin. Mm-hmm. But the model here is different than anything else. It's, you could say it's similar to gold mining, but, in gold mining, you don't have this steady emission schedule every 10 minutes,
Right.
which you have in Bitcoin. And that is unique in economics. So the model, no one's really been able to, I think, distill the essence of it. I think it is a new economic model completely. It's
Absolutely.
different than anything we've seen before. And the old line economists like Nouriel Roubini and Paul Krugman, they're completely
Oh
off
my
base. They have no
God.
idea what they're talking about. They're completely wrong. Yeah, Safina Moose with the Bitcoin Standard gives a great historical perspective, and I think he does the best job so far in making the case of Bitcoin as gold or gold 2.0.
Yeah,
And,
yeah. I know.
but
I remember when I first got into crypto. Um, Back then, we were still looking to have Bitcoin be like a cash equivalent, a digital cash version of fiat, a trustless, decentralized version of it. But as I've just kind of gone through this whole experience of cryptocurrencies over the past 6 years, man, I am now to the point where I look at Bitcoin as gold or a digital asset. What are your thoughts? Is Bitcoin cash or is Bitcoin gold?
right. So going back to 2011, and the first company to really be established in the space was BitPay, and they positioned themselves as the PayPal of Bitcoin.
Right.
And everyone was really excited about payments and that you could compete with PayPal. And this was a great way to go around all the legacy systems. And after a few years, though, it became obvious that Bitcoin doesn't scale like Visa or MasterCard. And around 2016 is when this idea came into fruition in a big way, that actually the way to look at Bitcoin would be as a store of value.
Right.
And then from there, if it like the history of gold, gold was first a collectible, and then it became a store of value, then it became a medium of exchange, then it became a unit of account. So Bitcoin on that curve is really still in between collectible and store of value.
Mm-hmm.
And it's getting to the point now where it will be considered a medium of exchange or unit of account. So that's happening with, let's say, Abra. I don't know if you followed the story from Abra, the wallet
Yeah.
company. They've introduced a new Bitcoin-backed way to buy stocks and bonds and ETFs and commodities all over the world. And they use Bitcoin on the back end as the unit of account. So users are not even aware that they're buying and selling Bitcoin. So because that's, for them, they're buying Apple stock. But the Apple
Mm-hmm.
stock is actually goes through a Bitcoin layer, and it's all accounted for and hedged and managed through the Bitcoin smart contracts on the back end. And so that's now Bitcoin as unit of account. So I talked to Bill Barhydt about this, and he makes an interesting point. To your point about, is it a medium of exchange? Is it store of value? His belief, and I can see where he's coming from, is that the demand for Bitcoin, which we all thought would come from payments,
Yeah.
we wanted every merchant in the world to accept Bitcoin.
Right.
This was the goal, and this is where it's going to scale, and this is how the revolution is going to happen. But he makes the point that Bitcoin as collateral could
Mm.
be the drive adoption
So you
in a
mean
much bigger way.
so you mean like having sovereign countries use it as a collateralized type of asset?
Well, in the case of Abra, they need Bitcoin for collateral to make for the platform. So they're
Right.
a big buyer of Bitcoin, and they're a big trader of Bitcoin. And so similar types of platforms like Bakkt and others and financial institutions, to create these contracts and to create these markets, they need Bitcoin as collateral. They need Bitcoin in the bank. So
Yeah.
that could be the biggest demand from Bitcoin before we see it evolving into payment.
What is the
And
catalyst for that transition? What you're talking about? Is it the sovereign debt crisis that we see bubbling up, or they've been covering over for the last 10 years? That finally folding, is that going to be the catalyst for us to see Bitcoin used in that manner?
Well, the catalyst, as far as Abra is concerned, is that it's cheaper. You know, this is a
Gotcha.
way they can offer all these services, and the user, for the first year anyway, they don't pay any fees.
Mm-hmm.
So because of the frictionless quality of Bitcoin and smart contracts, and you can recreate, and with this particular system, the KYC AML is not required. So think about this. This kind of opens up another discussion about capitalism.
Right.
And in America at the moment, there's a lot of talk about we need to revisit capitalism. We need to tax billionaires.
Oh
We
my
need
God.
to adopt socialism and this type of thing. And I think what is missing and what needs to be understood about capitalism and why it's currently not really doing what it can do is that there's a lack of access. It's still very difficult for people to have access to these capital markets globally. But with a product like Abra, there are a billion people now who can get on the Abra app and have access to all stocks, all bonds, all commodities, all
Right.
forex contracts in the world. And once you give people access to these things, and once they understand hard money and they understand savings and they understand capital formation, then they're good to go. They want economic individual sovereignty. Will always win out over being managed by a centralized authority like the state.
Right.
That's not a naturally occurring way to organize human beings. Human beings are naturally individually sovereign, and they have a sense of individual worth. Once you undercut that with what would very broadly, you could say would be called socialism, you are disincentivizing a functioning society and economy. And we see that over and over again. There's no example really of a functioning economy or state that is managed by a centralized authority. And the biggest problem in the U.S. economy is the centralization of the banking system through the central bank. I mean, if you got rid of the central bank or opened the central bank up to genuine price discovery for money and interest rates, it would have a profound impact on the economy in a very positive way.
Yeah.
So anyway, that's on the demand side. So, but your question was really, will the demand be, will it come from a flight to quality? And I
Correct.
think that since the introduction of the Genesis block in 2009, we have not had a global financial crisis like we had in 2008.
That's true.
The Genesis block came about after the global financial crisis and in response to the global financial crisis. But we haven't had the next chapter yet. But it looks like in this year we will resume the global crisis, and this will now be the opportunity for there to be a flight to quality into Bitcoin. It'll give central banks a way to preserve their assets, states, sovereign wealth funds, high net worth individuals. There are more than $100 trillion worth of investable assets around the world looking for returns. All the home offices around the world that manage hundreds of billions are always going to be looking for safe havens.
So just
And
imagine
and
10% of that, Max. 10% of that just spill over to crypto or Bitcoin. I
right,
mean,
and then
we're
you
looking.
have the halving is coming up, I think, in
Yes.
15 months or something.
Mm-hmm.
So the fundamental values, the fundamentals are starting to kick in. The demand is still there. The technologies had been uptime 99.99%.
Right.
I just Wells Fargo Bank just went down for
Yeah, I
48
did a
hours,
video
right?
about that. Yeah.
Yeah.
Crazy, crazy. So, I guess we can kind of roll into the whole Fed topic, man. We've got Jerome Powell. He spoke today at I forgot what event he spoke at today, but we had the stock market rally, and that probably rallied over what the Trump administration is doing. It looks like they may have a deal with the wall, but what are your thoughts about Jerome Powell, to me, backtracking on his interest rate schedule hikes that that the Fed were looking to do in 2019? It looks like he bowed to Mr. Trump there. What are your thoughts about that?
Well, as we say in the Kaiser report now for many years, you cannot taper a Ponzi scheme,
Right.
right? The U.S. economy is a Ponzi scheme, and you need that fresh Ponzi money at the base of the pyramid. And if you cut that off, the whole thing collapses. So anytime they raise rates, even by a quarter of a percentage point, stock market starts to collapse and they reverse themselves. What's interesting is that Powell said that, and this is new, that they are entertaining the idea of permanent quantitative easing. So there will be no end to quantitative easing. They're going to engage in permanent open market activity, permanent quantitative easing. There will never, ever be a point when this massive money printing Ponzi scheme stops.
And I
So that's
believe
very
you've
important.
said that back in 2008 or 9 on one of your shows. You said they will never be able to stop once they start.
Well, it goes back all the way to Alan Greenspan. He introduced this idea of the Greenspan put
Put,
back
yeah.
in the 1987. As I said, I was a stockbroker during the 1987 crash. And the day after the crash, October 20th, 1987, was the beginning of what's now called the plunge protection team. So Robert Rubin, Ronald Reagan, and Alan Greenspan created the Working Group on Finance in Washington, and they actively were buying S&P futures to jack the stock market higher.
Mm-hmm.
And that was the beginning then of government buying stocks and getting rid of the price discovery in the markets. And anytime markets went down, it was very convenient for them to simply buy in the open market, print money, and buy stocks. It got so absurd, crypto blood, that the Swiss National Bank actually prints money and buys Apple stock.
Yeah,
Right?
yeah.
One of the
Yes,
biggest
that's true.
owners of Apple stock.
That is
right?
very
Because
true.
money that they print, right? So they learned
Mm-hmm.
that from the plunge protection team from 1987. So
And then you
now
got Japan doing the same. They've been doing that for years, intervening in their equity markets as
yeah, I
well.
think half the equity market in Japan is owned by the central bank or more,
Exactly.
right? So
Same, man.
this is now on permanent. No, so this is going to be, I think, obviously, see, gold is, for the first time in 50 years, central banks are buying gold aggressively. They bought over 640 tons last year. They're going to buy over 600 tons this year. Price of gold is starting to perk up. And so this is great for Bitcoin, and Bitcoin, it's another fundamental reason why Bitcoin looks attractive.
It's just so obvious. If you just like plot when since 2009, 8, no, well, 2009, you plot the Federal Reserve looking to, in QE1, the stock market pulls back. Then they do QE2. Then they in QE2, and then the stock market pulls back. It's so evident that the stock market is only going up because of their easy monetary policy. And so it's like they say that they're not focused on the stock market, but it's so obvious that the Fed is only concerned with the stock market, right?
That's the only metric they look at. It makes sense because something like 50% of all the stocks in America are owned by 1% of the population.
Yes, that's right.
I think 85% of all the stocks are owned by the top 10% of the population. So that's their constituency. And, if they wanted to do something for the economy, they could have done, Barack Obama could have, instead of bailing out the creditors, he could have bailed out the debtors. He could have made whole.
Could have helped us millennials who have student loan debt as a mortgage. He could have helped us out. We would have been spending crazy if he would have helped us out.
It would have been cheaper because they printed $17 trillion to bail out the bankers, and all they did was perpetuate the Ponzi scheme and made it worse. Had he bailed out you guys with student loans, mortgages, and credit card debt, you would have then been in a position to rebuild the economy with actual jobs, and it would have been a more robust economy, and it would not have been now in this precarious state that it's in now. This next leg of this crisis, this big drop, is going to be catastrophic on many levels. I mean, you see de-globalization going on all over, de-dollarization going on. Countries are no longer really interested in a globalized world. Trump has said, look, we want to pull out of the globalist game. You have Brexit, where they're pulling out of the EU. With the remaining EU is splitting apart. Italy looks like it's falling apart. You have the U.S., Saudi Arabia is pulling out of OPEC or realigning OPEC. That whole globalized institution is falling apart. So this is all a recipe for currency disaster, economic disaster, and the dollar at the moment is benefiting. But I think that ultimately, since it's not has zero, it can't compete with gold, and increasingly people will realize that it can't compete with Bitcoin either. So the dollar is a bit of a roach motel.
Yeah, no, I agree. I agree. But I don't think the dollar is just going to, or any of these fiat currencies are just going to go poof, disappear overnight. I think it's already been a slow, gradual death, but I think it'll just continue to be a slow death. What are your thoughts about that? Do you see it just having us getting to a point where it's so bad it just all disappears and we move to a new system, or do you see a gradual movement away from fiat currencies?
Well, the average lifespan for paper money or fiat currency, going back 300 years, is 27 years.
Hmm.
None have ever survived. They've all gone to zero. The one that's kind of the longest standing one would be the British pound.
Hmm.
But, it's not backed by silver or gold as it once was. Of course, none of them are backed by anything tangible anymore as of 1971 when the U.S. closed the gold window. So it's all fiat money referring to other fiat money. So I would say that the British pound you'd have to start the clock, when they went off the metal standard, really. You can't really go back to the 1794 and the creation of the Bank of England. So,
So,
the
yeah,
fact is that they all go to zero.
yeah,
None of them survive. They all go to zero. They all go to zero.
yeah, that's true. So, lastly, man, and this is kind of going along with the whole sovereign thing. Venezuela, man, this is the epicenter of what we can now today our Zimbabwe moment, right, where we've got the hyperinflation going on with them. Maduro is looking, they're trying to get him out of there. And I thought about it. Maduro has this petro crypto thing initiative he's been trying to build the last year or so. The United States put sanctions on them, told citizens of America, you cannot use this petro crypto. If you do, you're gonna be having some real issues. Do you think that the ousting of Maduro might be partially because of his defiance and his initiative to start his own petro crypto?
Well, any country that's moved away from the dollar and pricing their energy has been bombed. Gaddafi in Libya, he wanted to start trading energy outside of the dollar. He was taken out. Saddam Hussein similarly taken out. You'd have this pattern where the U.S. dollar, empire can't abide by having anyone trading in energy or anything else in something other than the dollar. And in the case of Venezuela, they are not going to get much traction with the petro. It's not really a robust cryptocurrency. It's a kind of I think it sets the stage for some other country to go on 100% Bitcoin. There's 100 central banks in the world. One of them will wise up and figure out that if we convert our reserves to Bitcoin, we're going to become the only hard money central bank in the world,
Right.
and attract a lot of capital. Venezuela is it's an interesting situation because the U.S. is obviously engaged in other countries in a coup, and they're
Yep.
meddling in that country's affairs.
Right.
And it's not debatable. It's unequivocally true. At the same time, and people will say that's great, and we should be meddling in their affairs. And that's the mainstream media's line, and you see that all the time in mainstream America. At the same time, these folks will say that Russia, meddled in the U.S. elections in 2016, even though there's no evidence for that or proof for that. But somehow that's not of the same scale as the U.S. meddling in these other countries. You know, it's hypocritical to the extreme, and it's just playing out in real time. How can that not be hypocritical? You know, it's just amazing the blindness that you see in mainstream
I know.
media
It
about these
is.
issues.
It really is. So, final thoughts, man. I really appreciate you coming on. What are your final thoughts about crypto 2019 and beyond? Like, I want to have you back on to discuss STOs. I think that's going to be huge, where in the future you see, a lot of companies not going to Wall Street to go public, but going to the blockchain. So we'll have to talk about that in the future. But what are your final thoughts for 2019 and beyond for crypto?
I think that, yeah, I mean, thanks for having me on, but, the fundamentals are very strong. And so I think we're starting to see the adoption rates I've always thought been driven by crisis. And the crisis outside of crypto is now bigger than the crisis inside of crypto. You
Mm-hmm.
know, the protocol is ingenious because it managed to force out the bad actors like Jihan Wu and others, and it killed them. You know, it forced them out
Mm-hmm.
through its own internal game theory mechanisms. And now it's the timing of this next bull market, this next phase is right in there with the collapse of some of these other banks and currencies. So it's all working out perfectly to plan, Crypto Blood. It's all happening exactly as Satoshi envisioned it. We're right on schedule. We're exactly where we should be.
That's great, man. We millennials need it more than anybody. I'm telling you, we're struggling over here, man. It's your boy Crypto Blood, and that's another Kicking It session with the legendary Max Keiser. We out of here, people. How?